Welcome everyone to our second quarter market review. We are going to run through what happened over the quarter, and quite a quarter it was. Really a strong quarter across the board for the global equity markets. We saw in the US equity space, markets up 11%, and that was primarily led by growth equities, which was interesting because over the first quarter, large value started to lead. So we're starting to see, or we started to see growth come back a little bit. Those Mag 7 names that we've talked a lot about, Google, Apple, Tesla, Netflix, and Amazon. Growth was back in vogue over the quarter, helped propel those markets. And then in the international markets, which had a very strong first quarter. They kept up their strong performance at over 12%. So besting US equities, but just by a little. So some really strong performance across the board. And that's really amid, which was interesting, amid the conflicts that we have going on, and of course, Russia, Ukraine, in the Mid East. But also with the uncertainty that we had over the quarter with tariffs, and we'll get to that in a little bit, and that's our chart of the quarter. In the fixed income markets, yields were essentially flat. There was not a lot of movement at the long or the short end of the curve. And essentially what you did over the quarter as a fixed income investor was just clip the coupon and pick up that yield. And so for the quarter, the broad fixed income markets were up 1.2%, as represented by the Barclays Aggregate. And then on the unemployment front, we like noting that in terms of just how things look, and the unemployment rate actually ticked down to 4.1 from 4.2%. So that was some good news on that front. So some really strong returns, across the board, but it's been quite a volatile quarter too. And, let's just look at from quarter to quarter, especially in the US equity space. That is probably the most interesting. I already alluded to it a little earlier, which was large values started to outperform and lead the way. We know growth stocks really over the last couple of calendar years have led the way with, certainly, again, we've heard a lot about the Magnificent Seven. And, I think that was just really the markets acknowledging the value in some of these value stocks, and that growth stocks had gotten pretty pricey. And so things were broadening out a little bit in the market, which was healthy. But over this quarter, that reversed, and you'll see the Russell 1000 growth here, that you look at that top left-hand chart, up almost 18% versus value, which was at 3.8. For the year, really what that did was even the scales. They're both at about 6% for the year now. So it'll be interesting to see what happens from here on out. But the rise in growth stocks versus value, I think it's predicated a lot on the economy and what's going on, and certainly a lot of the expectations. The other emerging story, and also interesting, which really was just a continuation though of the first quarter, were the international markets and their performance. And we saw again some strong performance in the international markets, whether that was developed or even in the emerging markets. For the quarter, we did see a slight reversal in terms of the best performing style. In the international markets, really, it's been large value that's led the way. It's been almost a mirror image in the international markets as it has been in the US markets in terms of the style leadership. And that changed as well in the international markets, although quite frankly, the difference isn't that dramatic. Large growth was at 13% for the quarter versus large value at 9%. But again, the international markets, and we've mentioned this in the past, don't have those large tech stocks, those Mag 7 stocks, behind them. So certainly that's one reason why the performance Certainly when you look at some of the growthier tech, growthier names and styles in the international markets, yeah, are much different in terms of those return patterns than the US equity markets. Fixed income with no rate changes over the quarter, the Fed is holding steady. That's because of tariffs and tariff talk and the potential for tariffs. There you go. I'll say it 3 times. They're holding steady. They have been holding steady, and that's been changing a lot. And going into the quarter, and we'll get to this in the chart, there certainly was a lot of talk of tariffs. Those came off a lot. The yield, while there was some volatility in the fixed income markets, with rates, really over the quarter, rates held steady. And if you look at the yield curve on the far right, the yield curve, is essentially still remains essentially flat. So not a lot of movement. We do like to see a positive sloping yield curve. That means we have a healthy, that's often been noted as a healthy environment versus a downward sloping yield curve, which some folks say may predict a recession. But again, right now rates are relatively flat. I think there are a lot of folks out there that are anticipating with this decrease in inflation that we've gradually seen, albeit that looks like it may be currently ticking up a tad. But that hopefully with some of those better inflation numbers at the Fed will be bringing short-term rates down. And I think that's why we haven't seen a lot of movement at the long end of the curve. But, really all to say, as we look at the equity markets, we look at fixed income, should you be in value growth? Should you be long? Should you be short? It's really best. It's tough to know. The leadership has been changing now. Quarterly value growth, is a better to be positioned, again, short or long. It's best really within these markets and in any market to be diversified. And so our Kaleidoscope here shows the leadership of asset classes year over year and how that changes. International is the best performing asset class over the year. I think that's attributable to certainly a lot of the value that's seen internationally. A lot of those stocks, again, I know large values led the way internationally versus large growth in our domestic markets. But a lot of folks think, a lot of investors, participants out there believe, certainly with the tariffs and everything going on in the US and at the valuations we are at, which is really a function of the last couple of years, that maybe, there's more room to go in the international markets and being invested overseas. And so that's what we're seeing. The chart of the quarter is aptly titled Tariff Turbulence. And I've already touched on tariffs a little bit and the fact that amid this and amid the talk of tariffs and some pretty high tariffs at that, it's been interesting that we've had such great performance in the markets. But that said, the tariff talk may be just tariff talk, and this chart denotes what tariffs were at, or the effective tariff rate at the beginning of the quarter, and that's the orange bar, which the effective tariff rate shown here was as high as 30%, really higher than it ever had historically been. And this is going back quite a ways. If you fast forward though to the end of the quarter, a lot of those tariffs were pulled back, or the talk of tariffs being implemented at those high rates being pulled back. In fact, cut in half to 15% being the effective tariff rate at the end of the quarter, June 30th, to 15%, and that's that blue bar. Still much higher than it's been in the last 20, 30 or so years. But that said, it's really tough to know, what these are going to be. And so expect some more volatility potentially in the markets. But I think the market was relieved certainly a lot as a lot of those really high tariffs that were mentioned at the beginning of the quarter began to be rolled or peeled back at the end. And certainly the markets like that in a big way. On hold, though, is still the Fed in terms of short-term rates and what they'll do. I know tariffs have been one of the reasons that they've given in terms of holding steady right now. We'll see what happens. Certainly the third quarter, a lot to be seen in terms of what happens with regards to tariffs and then how that really affects the Fed in terms of what they do looking at tariffs, and then also how that may or may not impact inflation. That's it for the second quarter market review. And thanks again, and we'll see y'all next time. Bye.